Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right. Who's ready for Non-Farms Friday? Holy crap, that shouldn't be so loud. All right, to the charts. Here's the treasuries. Treasuries have continued to move up. I mean, after news and a couple of... What was it? What was it that spiked them up yesterday? I can't even remember. Was it the non-farms and all of that stuff? Anyways, they gave up those gains, but then in the overnight session, we moved up, and we were getting a lot of talk out of Japan again. The Japanese yen is moving up. And I would think that, you know, Japanese yen moving up and yields in Japan getting better would reduce demand for U.S. treasuries, but it seems to be having the opposite effect because it's like the funds are still going to buy U.S. stuff and they can buy more of it because the yen is stronger or something like that. So that's the dynamic that it looks like we've got going on right now in the treasuries, and they are at new highs for the week. Here's the S&P 500 having a pretty good ride yesterday and ending the day at new all-time highs. Oil continues to be within that range, so that 80, there's a lot of people selling at 80, man. There doesn't seem to be any confidence that they'll be able to stay above 80. Gold and silver, man, when you look at that chart in gold now, holy cow, it's really going. Copper is doing okay, but consolidating after the big breakout they had yesterday. Here you can see the Japanese yen on top there, breaking out a little bit. You know, Japanese yen is looking really good. We have to really zoom out now, don't we? Yeah, and the dollar heading back towards 102.6, and Bitcoin. Well, Bitcoin isn't breaking out yet, but it's looking pretty okay, and I'm going to bet that they just kind of dawdle for the rest of the week and then try and make a huge push over the weekend. That's their modus operandi. So, today we have non-farms payroll. They are looking for a reading of 200,000. Goldman Sachs analysts in particular are looking for 215, and I think that they're probably on the mark. I think that the number will be slightly better than expected, with the caveat that the risk is that if the number is bad, it will be really bad. Okay, so there could be some like mean reverting, number revision sort of stuff that comes back and bites us and causes the numbers to be unusually weak. If it comes out and there's like another 300,000 non-farms number, my head's just going to explode because I just can't take it anymore, right? So that's basically what we're looking at. Big thing though, I think that the average earnings month over month is a big deal. So the consensus estimate is spot 2. I think it's probably more likely to be at like spot 3, but if we were to get something like spot 4, and remember last month it was really bad. Okay, so if that number is higher than anticipated, that could really hammer this market down. So that's one thing that I would really, really pay attention to. And remember that there's the average hourly earnings, and there is the actual unemployment rate, which is from the household survey, have kind of been diverging and or contradicting each other a lot. So this is a very complicated number to trade. There's a lot at work. The first move is probably not the last move. So, I think I did pretty good today. Well, we got 2 minutes. I think I did pretty okay getting here at a good time and everything, getting ready. Had many challenges, but it didn't stop me from getting here on time, so I'm super happy about it. Yeah, Uzi, ready for another blowout number that makes no sense? If it's like over 300,000, my head's just gonna explode. I just can't handle it anymore. Well, I tell you what, they sure are pulling early. I'm gonna blow my nose. All right, that's a little better. Good morning, Andre, A. Paul, Alan White, Dom, Rob. Glad to see so many people here bright and early for this non-farms, because this one is going to be big. 1 minute left. News Squawk's pointing out that the dollar is slumping into the data. 300K would be big. Like, if we got another 300K, I think it would really shock the market, because they seem to think that that was like a one-off and that you're not going to get that this time. But we'll see. Okay, so I see them moving down here. 275. Unemployment rate ticked up to 3.9%. An average earnings month over month spot 1. Wow. So, the market clearly sold off of that, although they're recovering a lot of that downside action very quickly. So I think that that's mostly just a very illiquid market. But seeing the average earnings be spot 1, that is, I think, kind of important. And look, now they're coming back. That may actually be more important than the headline number. Like if we're getting strong growth without any kind of inflation, then the treasuries are going to love that. The treasuries are going to love that. But how can you add, well, it must be immigration and so forth, because how do you get non-farm payrolls go up 275, but the unemployment rate tick up to spot 2%? That's a little weird. So I don't think that this is another like shock number per se. I'm definitely surprised that it's 275. I said it's probably going to be a little bit higher than usual. 275 is a lot more than a little bit, right? But it's not like, double or whatever. The other thing is I don't have the revisions yet. I didn't hear what the revisions, or my News Squawk doesn't necessarily give revisions. So I'm going to kind of wait here and see if that last month's number gets revised down, right? I'm honestly like terrified to try and trade this, because that's a pretty... So we've had a lot of surprises lately, right? But those surprises were like, oh my gosh, and it just moves, right? This one I think is surprised, but I think that there's also surprise in the nuance of it, and so I think that there's probably going to be a lot of volatility here, and I think that the treasuries overall are going to move up, but by how much and everything, I don't know that. So I'm very, very weary about trying to take a trade off of this. I'm sure there's going to be people that are going to take trades here and just make a ton of money, but okay. The change in total non-farm payroll employment for December was revised down by 43,000 from 333,000 to 290. Okay, that's still like way more than what they were expecting on that month. And the change for January was revised down by 124,000 to 229. That is bullshit. They basically it got revised down to what the market was expecting. Oh my, wait, what was the market expecting that time? Let me come back to the chart and see exactly what it was. They last month, the January one, I think it was, right? So what we're getting is, anyways, January they were expecting. No. It was the one where they were expecting like 189 and they got 350. Yeah. So, okay. So it's still a little bit higher than what they were expected by about 40,000. But like there's another month that it could get revised. It's awfully suspicious, isn't it? That like they always tend to revise towards what the consensus estimate was. So I kind of almost have to look at that number and assume that like they're going to revise that number down. And if they revise that number down by like, 50,000 or something like that, then that would be right in line with what Goldman Sachs was expecting. So it's kind of like I almost kind of think that I should consider this in line with expectations. But in line with expectations, I think for treasuries at least is kind of good, because the expectation is that inflation is coming off and won't be a concern for the rest of this year. Now, the split side of that is, can they cut rates in June? I don't see how you do that. They're saying like, oh, we have a restrictive stance. We want to bring our stance back to neutral. I am not convinced that we have a restrictive stance. Where is the evidence that our stance, like the effect that it is having on the economy, where is the evidence that it is too hot and that we need to bring it back to neutral? If anything, it's neutral right now. I don't know how you calculate that sort of a thing, but that's just kind of like my spitballing, uneducated. I'm watching this thing, I don't know. I'm not. So here's the thing. If it was really like they were fudging the numbers and it was propaganda, if it was purely propaganda, I don't think that it would be so cut one way. It seems to me that there is a clear, like, what would we call it? Like a mistake, there's some sort of a force that is affecting this, that it probably has something to do with some of the assumptions that they're making in terms of like seasonal revisions and things like that. And for some reason, the market analysts are just not picking up on it. And they haven't figured out what it is yet so that they can get a good estimate. Because it doesn't make sense that it would be bad, like that they would be that off every time, right? And that it would be always one way. Because if it was for propaganda's sake, then you would always have the numbers be, you would want to shift it based on the situation and so forth. And you wouldn't want it to be so crazy. that people are just flabbergasted every time, you know? And not only that, but I don't really think that non-farms is affecting or coloring people's opinion of anything. You know? Like if the objective is to pump the numbers to try and help Joe Biden's re-election bid, it's not working. Which, by the way, I didn't get a chance to see the Statement of the Union last night, so I have to watch that today. I'm going to assume, though, that he continues to be a little bit tone deaf. I guess we'll find out after Biden wins. Ooh, big order showing up there, and they met him. Let's see what happens there. They ticked down, but I mean there was somebody was willing to fill him awfully quickly, wasn't there? 13K positive? Yeah, it's big. So in the S&P 500, they're responding pretty positively to this news. I'm a little scared to think about what the S&P will do on the open. They continue to be positive like that. Come on. You can do it. There you go. That wasn't a bad little scalp, was it? Like, it's not just that there's a pretty strong change in cumulative delta, but the market orders just continue to come in pretty heavily. And yeah, the Japanese yen, Brett pointing out the Japanese yen moving up. The Japanese yen is moving very, very strongly. Okay, got out there. So what was that? 128? Oh, 93. Only three ticks? Oh, okay. Well, so much absorb. Well, yeah, look, there's, I didn't necessarily have to take that off. But look, reloading at 25. Oh, 02.5 rather. Gold is just, oof. Now look at these charts here, man. If I can try and show you where my do it this way. Look at gold just taken off. Silver, biggest winner right now, up 1.16%, followed by gold at 1.08, and then the Japanese yen, and then the small caps doing really well here. Where's my right there, RTY? That's pretty good. But you know what? Like, that's the most, like, in terms of for us, for trading, and like if you're doing a CTA strategy and you're catching momentum and things like that, that's probably the best you could possibly get, right? Like, gold is already broken out and is catching some momentum, so you're making tons of money over there. And then the small caps have been underperforming a lot lately, and they're catching up. And that's good because maybe the market breadth improves. Hey, Paul. Let's come over here and see if Zero Hedge has a story about the numbers yet. Doesn't look like they do. Should have waited to get 128, but, or sorry, 125, but that's okay. Thing is I really have no clue how far this is going to go. Like this kind of pattern that we're getting here, it's a little bit unusual. So like big down move, come back up, and then come back to break even, and now push. And because often these first waves are like kind of extremes that become very difficult for them to get through because of liquidity. But in this case, it was easy for them to push through it. The market orders are just tremendous and are out there. But when you get in that many market orders and everything, I start to get a little bit concerned about how much of that is just day trading and will come back as they take profits. Because I do think they probably have a little bit more in them. It's just, you know, there's probably going to be some pullbacks involved. If I come back to like a daily chart here in ZN, right? Okay, so we're kind of coming to a stop area again, right? This is based on the average true range. We're coming into a stop today. So that could trigger some things, because well, I think that you're going to see both some momentum strategies and some mean reversion strategies stepping in and doing some stuff. So I'm a little bit cautious about that. It's this kind of a contradictory situation, because you've got, I think, pretty strong news, pretty strong reason for them to want to buy it up, but some much higher levels, much higher time frame levels rather, coming in here and affecting things. So they're also very clearly above all of the moving averages now after that. So that probably also plays into it. But you can see that's like, well, 1, 2, 3, 4, 5, maybe 6, depending on how you count it. 6 ticks back. That's a pretty decent pullback. Like if you're getting a trend day, you often don't get a pullback more than 4 to 6. So to have already had one of those is kind of shows you what it is, right? Like this is a little bit of a dangerous market in terms of you're gonna have to basically, like, if you're trading multiple contracts, we would probably want to reduce the number of contracts that we're taking on to account for the larger range and larger pullbacks that we're seeing. I'm freaking out already. Well, man, like S&P. What about the S&P? So if I come back over here to that chart, like, can you imagine? So they've got a pretty good trend coming on here, and then all of a sudden today you get like a big up day. It's a little unnerving. And you come in and change that chart to give me a bigger margin. There we go. Let's put today's title, another non-farms blowout. Expectations blowout. You know, I said that if we had another one that was over 300,000, that my head would explode. We got 275. So I would like, if it is the BLS out there, fudging the numbers for Joe Biden's sake. I would like to thank them for not fudging the numbers too much so that my head didn't explode and kill me today, right? Thank you very much. Now they're going to have buy icebergs chasing it? I don't know. So far, all the way back here to 112 even, there hasn't been a whole lot of support. And I haven't noticed a whole lot of iceberging. They were iceberging it all the way up, and then it looks to me like the large meta order buy has subsided, and so when that happened, the post meta order mean reversion period is pretty steep because we went so fast and the liquidity behind us is just so soft. Did we change time already? No, it's not daylight savings time yet. If that's what you mean. Maybe your clock is just off. I really want to see the story here. Even if I go to the premium page where sometimes you can see stories early, it's not showing me. Would you say that they're more active than usual? Well, but you know what, Lucas? The markets have been more active than usual all week, I would say. Like, the treasuries are breaking all-time highs for volume and stuff like that this month or so. Past week, 2 weeks. So you might just be picking up on that. The treasuries certainly did some cray-cray things. You know what, though? Like, so Uzi pointed out earlier that since the news, it's basically been 15K net contracts buy. But that cumulative delta has completely retraced. Now, that is not necessarily the case in the 30-year. So can you see here? The 5-year pretty clearly bought. The 30-year, they bought on the initial news and then sold it. So what does that mean? They're buying the front month, they're selling the back month. That is steepener. You can see it right there. It's pretty strong steepener. Actually, let's come back over to this daily chart here on ZN. Oh, no. Let's do it on the intraday chart. Okay. So there was a little bit of flattening a few days ago. Okay, but that is a pretty massive steepener. Maybe I need to put it on a daily chart because I was pretty sure that somewhere we started steepening, but I don't remember when it changed. Can I put it on a daily chart? Why don't I have it on a daily chart? I know, let's try. I'm pretty sure that it should work on a daily chart. And that's part of why I made the candles. Spread candles. Oh, no. We don't need spread candles because that's the old version. We just need spread, and it does it. Yes. And let's do it with ZT, ZN, 4, 1, chart type candles. I won't gray historical bars. Okay. Da-da-da-da. Ah, yes. So it was starting around about July that we started seeing steepening. And then when the treasuries came back up here, and more recently we've been flattening for the past month or two. I got you. So then this, if I wanted to buy steepeners, if I really wanted to buy steepeners, this is maybe a good spot to do it. But I don't know. When I look at the chart and everything, and I'm looking at treasuries, and I'm like, okay, like how much more upside can the treasuries really have here? I'm not, because I'm just really skeptical about how much easier the financial conditions could get before it would cause like real problems. So, you know, something I find interesting about the markets overall is you'll have weeks. It's been a week, right? Of course, every week is a week, but this week has really been very much a week. And a lot has happened. And, you know, like, for instance, there was the New York Community Bank was kind of having a little bit of a crisis, and then everything comes back and it's all fine, right? And I find that when that happens, that there is often this sort of like resolution with the non-farms or whatever that plays out in a way that I could never have predicted, but seems to fit so well for some reason. Is that just like backward looking bias? I don't know, but it just seems to me to a pretty fitting end to this week. Of course, there's still some things coming in March. I am looking at some of this stuff. Well, I don't know. Given that the hourly earnings declined, I'm not as concerned about CPI as I was. So I think that CPI could maybe come in line. Maybe next month I might be a little bit concerned. But, you know, later in this month is where we expect to start seeing, you know, some of the effects of the reverse repo facility emptying out and that sort of thing. So, you know, it looks really good right now. I don't think that those things necessarily have to cut the market down, but it's definitely going to get a little hairy here. You were sick for most of the week and couldn't trade? Well, you know, I haven't taken... So basically that whole time that I had that swing trade on, and it looks like in the end it was good that we were able to just scratch it. But so I hadn't really been looking for a lot of day trades. There was a trade in there that I took. What was the price that I got on the original? Okay, so the original buy was actually a little bit higher than we are right now. So I think I played that right. Because what happens to me often is I'll take those and I'll be like, oh, you know what? If I was trading the main treasury, I might have just taken like 1 or 2 ticks and it probably would have been fine. But when I try and do it over here in the micros, it's a little bit too much to do it over here. So I didn't do it down here. I really want to get a good live trade in, but I just haven't been seeing the opportunities for it. So I haven't taken a live trade. Well, I think I took a live trade in January, but I think it's been over a month now since I've taken a live trade. And every time, because every day this week I've kind of been looking at it and thinking maybe I might do something. But the way that it's been playing out has just kind of not been the best setups for me for whatever reason. So I'm sitting here wondering, like, am I being that way just because, you know, now it's been so long? And I don't know. I kind of wish I had a trade. Now, if this pulls back enough, and this is more than a pullback now, right? Like 4 to 6 is a pullback. Now we're getting a pretty strong all the way back here. Yeah, March 11th. There's March 11th, and then around that time, the reverse repo facility should empty out as well. So then those regional banks will really be under pressure. At the same time, are they going to do anything to kind of replace that? Because I don't think that those regional banks are in a very good position still. I think I need to add... I had price action swing on this to be able to see how deep the pullbacks were. And for whatever reason, it like got screwed up and I took it off. So I'm going to come in and add that back on here so that I can see a number on how deep the pullback was. And I'll put the swing size to 6. And just make it zigzag. Make the line a little different. Let's see here. Where's the line? Oh, width. 1 dot. The volume numbers off. We need to take the price off. Where's the price? Show price. Better. Okay, so 17 tick pullback. Let's save that template. Save as default. 17 ticks back. Economic Edge, that's a new name. Welcome to the stream. So many thumbs up. That's great. I've never gotten so many thumbs up, you know, all in one YouTube chat message at once. No, don't you all like send me two lines of thumbs up. We don't need that. Look at that. Look at it come back. Look at it come back. Okay, so at first I was like, okay, like I think that this is generally a fairly positive number for the treasuries, but this is going to be volatile. It's going to come back. Now I'm looking at it and you know, because like 112 even, that was like a pretty good spot for it to come back. Now I'm looking at it and I'm wondering, is there more? Is there something concerning in the number? Is there something concerning in the number? Because this seems to be a little bit more than just... Let's see here. Brannigan Barrett points out the 167K revision, that was the key trade, combined with the unemployment uptick to 3.9%. Very weak data print from the US. When you prepare for these events, you can perform well. I don't know if the market moved the way that it did because they thought that the number was weak. But I do think that hourly earnings for the Treasury was a really significant factor. Okay, Nick Timrose tweets, the index of aggregate weekly payrolls for private sector workers, which combines hiring, wages, and hours, was up 5.3% over the last 12 months. And looks like this over the last year. And then he shows a picture here. Year over year and 3-month annualized rate. It's really strong and then reverting back to its long run average. Huh. A lot of people are picking up on, though, the revision was 177,000. Jason Furman, a soft landing jobs report tilts the balance of worry ever so slightly away from inflation and towards recession, but overall things still looking good. 275K jobs added, hours up, but unemployment rate from 3.7 to 3.9, while participation flat, wage growth only spot 1%. And you know what? Another thing with that unemployment rate, like ticking up a little bit, that must be like tech layoffs, right? Like it seems to me like the headline numbers and everything are a little bit surprising, but there's also a little bit of like, oh, like maybe things are kind of coming back to like reasonable, or on the way towards reasonable at least. And the Jim Uriel retweeting Liz Ann Saunders, never how you dever. But she's pointing out that this is the third consecutive monthly drop in February household employment. Yeah, there's Jim. I'm just like going back in Twitter. So Jimmy Uriel, you guys see the revision from last month? Jeez, come on, man. It is. And they get to revise it again. If it gets revised down again, I'm sorry, but like it's just wild to me. Like, again, I'm not going to jump on the conspiracy theory train, but I don't see how you can get a number, the estimates be this off so much, and the revisions be so much every month. And it's not like a bigger topic of discussion. Like, I would expect there to be like all of these discussions about methodology and how are people estimating this number, and how is the BLS coming up with this number, and are there issues there? Because it shouldn't be this bad. I just cannot explain how you get it so bad for so long. You know, one of the things that I'm not really taking into account is that the treasuries and the S&P 500 sold super hard on the knee-jerk reaction to the news. So all of the algorithms, when they got the news, they just read the headline number and sold. Now, would I have fallen into that trap if I was really trying hard to like take a trade within that noise? Maybe. Because I didn't pick up on the revision until quite a bit later. I was more interested in the hourly earnings and the unemployment rate ticking up and so forth. So it's curious, but the price in the treasury is mostly back to where it was. The ZB is actually lower than it was from before the news. And of course, the ZF is a little bit higher. So there's some, you know, like the major change here. Like, it looks to me like not actually a major change in the absolute level of the treasuries, but rather continued steepening. So that's a little interesting to me. Again, I'm a little bit surprised how much it pulled back, so. Volatility in gold. Yeah, well, gold was up big time, and it's giving up most of its gains too. I'm not sure. Okay, so here's Zero Hedge with their first synopsis of the story. Death taxes and the Biden administration reporting a stellar jobs beat and then revising it sharply lower 1 month later. That was certainly the case moments ago when the BLS reported that in February a whopping 275,000 jobs were added, smashing both the median estimate of 200,000 and the whisper number of 215,000, which was the one that I was looking at, yes. In fact, just one Wall Street forecaster Seiji Katsura at Daiichi had a higher forecast at 286,000. And while the February was a strong print, it is just a placeholder until next month's downward revision. That's because January's blowout 353K print was revised sharply lower to just 229K, down a whopping 35%. However, as usual, there was an ugly divergence between the establishment survey and the household survey, which declined, once again sliding to 160 million from 161 million, or down 184,000. This means that the divergence between payrolls and employment extended as more people are forced on to take more than one job, according to Zero Hedge. That's probably, well, they're probably correct in that that's one factor. I also think that another factor is immigration. So you're getting really strong jobs growth, but like the unemployment rate is going down, then that says to me that like we're bringing in a lot of immigrants and those immigrants are getting jobs and that's causing those numbers to go up. But then there are people, you know, regular Americans are losing their jobs. And so more Americans are out of work, but the jobs number looks good, right? That's a little concerning. Like that's for this whole thing about like, are you trying to fudge the numbers for Joe Biden? But like, if Americans are losing jobs and you're bringing in all of this immigration, that's not good for the Biden administration, right? You want everybody to be doing well. Okay. That wasn't the only problem with today's jobs report. Bring that back over here. The unemployment rate rose unexpectedly to 3.9%, the highest since January of 2022, versus estimates of a 3.7% unchanged print. Among the major worker groups, the jobless rates for whites was unchanged at 3.4%. For blacks, it rose to 5.6%. Asians was flat at 3.4%, as were Hispanics at 5%. Oh, interesting. That's not what I expected. Because that was, again... okay, so if regular Americans are losing their jobs, well, there's been a lot of tech layoffs, so I thought maybe you would see it in the tech sector, and as such, you would maybe see more white and Asian people, the unemployment rates for those to go up. But it was blacks were the only demographic that took it on the nose. So is it that illegal immigration is coming and displacing black workers? See what I mean? Like, it's not necessarily good. You've seen these polling numbers that, like, Donald Trump was like, last time around, he was like 12% support among blacks, and now he's like 35%. And he's actually above Biden for Latino voters, right? Like, the Democrat strategy right now seems to be causing some people to go, hey, I don't know if this party is actually on my side. Anyways, I'm injecting too much of my opinion here. Let me continue reading. While the unemployment rate rose, the labor force participation rate was unchanged at 62.5%, disappointing expectations for a modest increase to 62.6. There was more good news on the wage front. Well, if you are a Fed, that is, the average hourly earnings growth dipped to 4.3% year over year from 4.4%, in line with expectations, while the monthly increase was just spot 1%, below the spot 2% estimate and down from a downward revised 5% print in January. So they revised the print in January down, but it was still 0.5. Okay. The average hourly earnings for all employees on private non-farm payrolls edged up by 5 cents, following an increase of 18 cents in January. Average hourly earnings were up by 0.1% in February and 4.3% over the year. In February, average hourly earnings of private sector production and non-supervisory employees edged up. In February, the average work week for all employees on private non-farm payrolls edged up by 0.1 hour, following a decline of 0.2 hour in January. In manufacturing, the average work week was a little changed at 30.9.9 hours, and overtime increased by about 2 hours to 3 hours in February. Some of these numbers that they're going a little bit into too much detail here. Taking a closer look at the job composition, we find that in February, job gains occurred in healthcare and government, food services and drinking places, social assistance, transportation, and warehousing. But where did the losses come from? Wait, can I see this picture a little bit deeper? Do they have technology information? Financial activities? The categories that they have aren't very good. Commenting on the report, Bloomberg economics chief Anna Galvo writes that the combination of a mild upside surprise to payrolls, but an unexpected increase in the unemployment rate, muddies the pictures for markets. BE's macro finance SHOK model suggests forecasts for treasury yields would be little changed. One thing is certain, markets loved the print, with futures spiking to a new all-time high and the dollar sliding to a new one-month low as the BLS mandate of doing everything in its power to push markets ever higher until the election, reality and facts be damned, comes into full view. I really hate the way that they cut. They make an assumption, and then everything that happens is just in line with that assumption. And so they're like listing off a bunch of numbers and statistics. So one might be fooled into thinking that there's like proof that this is happening, but it's not. They are basically like creating a false reality for you, and the way that they push it so hard just like super rubs me the wrong way. But they're like, Zero Hedge is like the only place that you really get this kind of information in synopsis. So it's like, what you gonna do? Okay, now the treasuries are actually lower than from before the news. And the S&P 500 starting to give up gains as well. Well, you know what? It's a Friday, and on Non-Farms Friday, I see all sorts of moves that I have a hard time figuring out and take me by surprise and stuff like that. Yeah, the dollar recovering. You know, when I read that report and I hear the comment from the Bloomberg economics chief, right? I kind of come back to, oh, you know what? Treasuries should just be where they were, if not back to where they were yesterday, because some of this movement overnight surely had to be about, you know, people front running non-farms, right? So if they were buying it, you know, they could sell and maybe we could revert towards yesterday's prices. But I'm you know, now I'm looking at it as like, okay, this pop off and then come back down. That's not like necessarily, oh, there's something bad in the report or there's something we missed or anything like that. It could just be like, oh, okay, but after the dust settles, we realize that nothing should really change. And maybe that's what's happening, and that's why they're retracing, you know, the move and so forth. Wow, is that really? Biden wants to give free money to home buyers. Did he really promote that same kind of disastrous policy that they're putting in place in California on a national level? Does he really? Is he really that clueless? Are the Democrats really that clueless? Or are they just doing it to play to their base? I kind of feel like they're just doing it to play to their base. But I don't know if it actually does play to their base. Like, anybody that knows what's going on should... Anybody that understands anything about economics should say, oh, giving people more money to buy something should cause the price of that thing to go up. You say that it's a bit just risky to sell it. Yeah, well, yeah. I mean, you're just looking at the volume profile there. Sure. I would say it will be harder for them to move below here than it was for them to come back. But you're right. I would be. I don't think that there's going to be a breakout in this situation. But yeah, I'm way more interested in because ultimately, like, what is the thing that matters the most, right? Because I kind of look at all of these other things as just like, this is the lay of the land. What matters the most? What matters the most is when a really big player comes in and buys or sells a lot of something, right? So I absolutely look for like breakouts. I'm looking for a situation where all of the retail traders are going to see that line and try and fade it. But I know that there's a really big buyer and that he doesn't care and he's just going to bust through it, right? Because he busts through it and then all of those guys puke, and that's where you get some of the craziest moves, right? It's just that in this situation, so if there was something in the report that was actually, you know, like let's say that we had the exact same movement that we did, okay? But the hourly earnings, or rather earnings, month over month earnings, was like spot 4 instead of spot 1, okay? Then I would be like, oh, that's inflationary. That's not good for Treasury, so it could possibly sell it. So if we were coming back down in here, I would be sitting here going like, I bet you there's going to be some big guys out here betting on further inflation, yada, 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 and they're just going to bust it, right? Then I would be taking that. I'm not predicting the future. I'm just evaluating risk, don't kill. Oh, but you're 100% right, though, aren't you? Right? Like, you're right that there is a little bit of like a support, like there's a liquidity level here. There's going to be more liquidity below this than there has been so far, right? And you're right that like I would be betting on a breakout, or that I tend to bet on breakouts because I'm kind of more interested in the situations where I see a lot of liquidity, but I think that there's market orders that are going to come through and just completely bust through it. I'm not going to say that that's like what I'm usually looking for in a trade, but those are the funnest trades, right? Those are the funnest trades. And maybe because I remember some of those trades and I want them so badly, I tend to see that when it's not there, perhaps. Right now, though, I tell you what. When we were up here, I was kind of like, well, pull back, but I don't want to take this. This is going to be like steep pullbacks, and I don't know. Like, if I had tried to buy it, I think if I had taken a trade today, that it would have been when they came back to 112 even. I would have said, you know, there'll probably be some people trying to pick up some liquidity here. They might pick it up and then it go another leg, right? And I would be underwater right now, I think. But I didn't do that because I felt like the situation was confusing enough that I didn't really know what the orders were going to be. So I'm glad that I didn't take a trade. But that doesn't really help me right now because now that it's come all the way back, now what does it do? Do you buy it now because they can't really get below that price? I mean, I guess if there was a trade available, that would be the trade, wouldn't it? But I just really don't feel confident in it. In fact, if there was anything that I would feel confident in, it would be like maybe they just start rotating around the open price. So there might be pretty decent, you know, there might be like an 8-tick winner in here somewhere still. But I think that we may just start to mean revert around this. I think that the best action is probably behind us. Yeah, the buying tapered off pretty deep off the bounce. I don't see a reason to jump into the buy. Yeah. And furthermore, if we were to come back and look at the treasuries, because like what am I really most interested in if we were to explain it from a technical standpoint? I'm looking for auto-correlated order flow, auto-correlated price movements, them all moving together. So is that what we're seeing right now? I'm going to say no, because, you know, there was a pretty strong buy there. Overall, we've net sold on the 10-year. Actually, we've net sold on all of them now. But, you know, that's like when you compare it through the whole overall move. Do I have signs of like somebody entering into a new meta order short? I'm going to say, like, especially this right here, that it's kind of flattened out for the last like 15 minutes or so. That kind of has me a little bit scared, right? I suppose that somewhere around this point, like right there, I maybe could have justified a trade. So then I maybe I could have picked up that, right? If I was, but are they going to continue to sell through here? I don't think I have enough evidence. I can't look at the ZB because we're steepening. So ZB is going to be a sell, right? ZF is a sell too, though. So the being steepening, but ZF coming down and the yield, the spread staying up there, that could maybe, you know. So I guess a short trade isn't as crazy as I thought maybe it would be, but I'm not seeing enough to make me feel really confident that the orders are going to continue to come in. That, like, there's a really good chance that was just the meta order. We're now in the post meta order mean reversion period, and it just stays there. That's much more likely. Granted, S&P 500 hasn't opened up yet, so let's see here. What does Uzi say? It looks more like what you're describing, just meandering. Yeah. Doesn't, I mean, there's enough that if I had a reason within the data to think that there was going to be a meta order short, that I could be stocking it and or already be in a position. But on its own, it's not strong enough for me to be taking. On its own, it's down, but not strongly enough, I feel. Yeah. Reddit announces, oh boy. Reddit announces Reddit Pro, a free suite of tools for businesses to also establish and grow a meaningful organic presence on Reddit. Okay, so that concerns me, actually, because I remember with Dig, part of the thing with Dig was like there was a deal for them to get bought out by Microsoft that I guess they passed on. And then they started changing the interface and people started not liking it. And some people started moving over to Reddit and there's all these sorts of things. But I think the point at which people were like, oh no, this is really stupid, was when they started adding things into Dig to help corporations. So like, for instance, there was this thing that was like, if you were a newspaper, the New York Times or whatever, it would automatically post your stories for you, for instance. And it was kind of almost like they were trying to help the big guys. And the audience did not like that at all. And on Reddit in general, there is a very strong distaste for any kind of like self-promotion. Like if I go to a subreddit and I post one of my videos, which I think this is one of the cases where as a community you should encourage those things. Like if you guys want content, then you should support the content creators, right? Like if a content creator posts content on Reddit and you like that content, you should upvote it so that that video does well and they're encouraged to make more content, right? But Reddit is like so anti self-promotion and so forth that sort of thing just like usually works against you. And they're very wary about corporations coming in and trying to like muddy the discussion or like stealth promote their products, things like that. So if Reddit is putting tools out to help corporations do that, I think that Reddit will not take kindly to it at all. And doing it as they are trying to IPO is a little concerning as well, because you're basically signaling to your user base now, okay, we're a corporation now, we're going to milk you for all we can, right? I don't know where they go, because I don't think that any of the alternatives are very good. But, you know, I've been thinking about, well, maybe the IPO price that they're getting is not bad. Like, I think of it like it's basically 6 times gross earnings, not net earnings, but like just their gross income is about a little bit under $1 billion, I believe. So if they're being valued at 6 times that, that's not terrible. That's not a terrible price per se. And if I got in on the IPO and everything, like maybe it's okay. But then there's still this issue of like, but do I actually want to own Reddit? Right? Well, you know, I don't necessarily have qualms with owning a part of a business that, you know, I don't completely agree with, or even if I think that business is like not a very good business. If I think that business is going to make money. So for instance, Reddit could make money from selling its data and people doing machine learning on it. Because it seems to me that a lot of the machine learning that we get, I think like for OpenAI, I think that the majority of the training data comes from YouTube videos and Reddit. But we don't really know. So they could maybe make money from doing that, right? But if the user base like starts rebelling, then it's not going to be worth very much, right? So that announcement, I think, kind of starts shifting me towards maybe not. Like before, I was like, maybe it might be a fun one to do. Now I'm kind of starting to think maybe not. Let's see. Is there anything on Reddit about this? Like if I go to my front page, are people talking about this? Oh, let's see here. So here's the answer. I take it that none of you guys watched the State of the Union either. I want to provide an annual tax credit that will give Americans $400 a month for the next 2 years as mortgage rates come down to put towards their mortgage. What? Okay, like when I saw that he was talking about a tax credit and everything, I was like, oh, that must be what people were talking about. But what he said is way more insane than I thought it would be. He wants to give everybody $400 a month to just put into their mortgage. That, oh my gosh. You can pinpoint the point when the amphetamine mix wore. That's funny. No, if he was on amphetamines, the half-life of those are 4 hours. So I would think that there's no way that it would wear off halfway through. So if he had a shift halfway through, it's just because of his health and energy levels. Okay, but the port in Gaza, ooh, he said something that's actually really curious to me. Because, you know what? Oh, wait, we want to start importing Gazan review. Are they really pushing that again? You gotta be kidding, man. Like, I expected the speech to be like a little bit tone deaf, to be pushing like far left kind of ideas and policies, and not talking about the things that most Americans are focused on right now. But this sounds like even more tone deaf than I thought. Because I don't think that anybody in the United States wants to import more Gazan refugees. Like, I remember when the left threw that put that trial balloon out, and it was like so disastrous, and it didn't even last a day. So I'd be really surprised that Joe Biden would be talking about it again. But maybe this is a slightly different trial balloon then, huh? Because he's not saying we want Gazan refugees directly, but they're saying we want a port in Gaza and we want to have a lot of trade with them. Is that what he's saying? I don't know. I mean, there is no port in Gaza, and at some point there should be. Like if things are getting better there, we would want to see a port in Gaza. There's not a port in Gaza right now because that would just be an inlet for smuggling of weapons. Okay, but if Israel, it seems to me that Israel is just going to take the area over for now and try and develop it, and as part of their development, maybe at some point they do make a port. We'll see. Okay, but I am getting distracted here. The comment that he says is, I want to provide an annual tax credit that will give Americans $400 a month for the next 2 years as mortgage rates come down to put towards their mortgage. Okay. Money is fungible. If I'm given $400 a month to put into my mortgage, that basically is, I'm still going to pay my mortgage, right? So that's basically $400 a month that I get to spend elsewhere. How big were those checks? How big were those checks that we got during the financial crisis and everything? Like, yeah, that's exactly. I 100% will be putting it into my children's 529 accounts. Straight up. No question about it, man. I think, like, honestly, every time that the government gives people money, I say, I need to save this for education, because college is not getting cheaper, right? And the more money that they pump out, the more that college expenses are going to go up, right? So it's not even just like you guys are so dumb, I can take advantage of this. No, it's like, I have to put it in this, or there's no way I'll ever be able to afford their college. And I don't want them to be burdened with debt like everybody else. It's crazy, but like, what were the stimulus checks? I don't remember. But like $400 a month for 2 years is a lot. That is a lot of stimulus. That is such a stupid, like, I cannot imagine a dumber thing that Biden could say right now than this policy. Because the reason that Americans are kind of not liking the way that things are going under the Biden administration is because we've seen a lot of inflation, and they believe that inflation is due to Joe Biden's policies. And so what does he go and he does? He suggests another inflationary policy. Of course, there's no chance that it will ever happen. But he's not getting any friends with this one, man. Everybody's just going to say, oh, great, more inflation. Sure, he might think that leftists will love this, but that's not the people that he needs to win this right now, I think. Like, the reason he won was because moderates turned against Donald Trump, right? If moderates think that Joe Biden is going to destroy their wealth through inflation, it's over. It's over. If that's the way that moderates come down, there's no way Joe Biden can recover from that. We can only, if you're a Joe Biden supporter, you can only hope that this is the last time that you ever hear about this and everybody forgets that he says it, right? Oh my gosh. I am just shocked that that's what was in the Statement of the Union address. That's the first thing that I see about it. Holy crap. Okay, but what we're really looking for is Reddit, right? Oh yeah, so if you haven't heard yet, the creator of Dragon Ball died last night. So you're probably going to see a lot about that on the internet today. Whoa, wait, what? This story can't be real. Let me, I'm going to read a story here. I need some water. Hey guys, I've come here because I don't know what to do and I've suffered many mental breakdowns. Earlier this year, I signed with a multi-strategy hedge fund to further develop my strategy with a senior PM. I had been working on this strategy for about 4 years and it was my literal baby. The agreement was a 50-50 profit and loss split with the trader, and we had the execution all ready to go until one day they fired me completely out of the blue. Because I was an at-will employee, they didn't have to prove a dibble justification. I don't know what he meant to say there. I don't think that dibble was the word he intended to use. Anyways, they took my strategy, which was nearly a 4 sharp over the past 3 years of historical data with over 4,000 trades. When I called their CIO, I don't know about that. You need 5 years. Come on. Okay, when I called their CIO, they simply said tough luck, and they were legally allowed to do this. I want to fight this legally on the argument of bad faith, but this could take years to resolve, and the pot is theoretical, so to speak. I had a pre-existing IP protection, but they are claiming that because they developed IP on top of it when I was working there, they own it, which is legally true. They found many loopholes in the agreement. I feel like I can't breathe because this project was a part of me. Please help and advise. That story is insane to me. Well, first thing is I would say who it is, because I don't think that anybody would ever want to work for them again, knowing that they basically steal your strategy and then fire you. That's so crazy. But there might be legal recourse there. I mean, if they're going to run your strategy and it's worth millions of dollars, there's absolutely reason to try and sue them, right? So here's a guy who says, this is unfortunately very common. Yes, many quant firms interview/hire purely to steal your strategy. They intentionally add some value on top so they can legally take it and then let you go to avoid the 50-50 split. Very common. And you don't, like, make a contract? Like, if I was coming in with a strategy like that to develop a strategy, I would not be working for them without a contract that basically said that I am entitled to 50% of the profits, even if I get fired. If they continue to develop the strategy and use it, I get a percentage. So that's wild. I would only do contingency. They switched me from salary to hourly without my consent, but I'm not sure if that's what? Okay, so that's another thing is like switching you to hourly is oh no, especially for a quant job. Are you kidding me? I'm surprised that he didn't just quit right then. If you can reproduce a strategy without using the actual assets from the bad firm, it's all yours. Of course, this assumes they are not in a non-competing with you or suing you. Just some general thoughts. There are several firms known for their love of IP phishing, and there are multiple PMs at large pod shops who love this too. It's called informational interviews, and usually you can tell very quickly what is going on. Outright hiring and firing is rarer and usually less explicit, like someone would join a pod, build and start running, only to be fired at the first drawdown. You can bet the PM will keep the strategy going. Some PMs have specific processes for it. Oh yeah. Oh dude, that would be terrible too. Like you get the strategy that has a drawdown at the beginning, you get fired, but then they continue to trade the strategy and make money on it. Oof. I would be so bitter. I would be so incredibly bitter. This whole story has me so triggered. Like he's saying, you know, like what did he say? I feel like I can't breathe because this project was a part of me. I feel this so hard, man. This is like, oh my gosh, what would you even do? It would just eat away at me for the rest of my life if that's what happened, you know? My buddy was given a take-home test that looked more like the interviewer's research project than anything else. He sent an email telling them that he can only be their pregnant dog after they hire and pay him. And of course, it was a commodities desk. Yeah, so you know what? One time I did an interview for a tech company. I forget what it was Rakuten. I'll tell you straight up who it was. It was Rakuten. And they were looking to like build up their business and compete with Amazon, essentially. And so they gave a take-home test. And they didn't really say, you know, it was basically like build this thing, right? And so you build the thing, and then I was basically judged on things about the work that was done that were not specified at all in any of the in any of the stuff, right? So like I made something that was like really flexible so that, you know, when we're in a interview we could like shift things around and stuff, right? And they wanted something that was geared towards performance, like all the way, right? And they didn't say anything about that in the requirements, right? So it was like, but basically I did this work. It was a decent amount of work, with a poor description of what they wanted given, and then, you know, didn't get the job. And I was like, yeah, that was the last time I'll ever do something like that. If you want me to do a take-home test, you're gonna have to pay me, right? I'm not gonna do work for you without you paying me. But some of these stories that they're telling are super sketchy. I can't believe that there are quant firms out there doing this kind of stuff. Most high-end places are big enough to have HHs on retainer. I'd say 70 to 80% of all interviews were informational in nature, but I've yet to hear of anyone actually asking to do research as part of the interview process. Can't imagine them getting too many takers on that. That's just awful. This is common in general. Many companies try to get free work or ideas with free take-homes. Let's about commodities desk, if you don't mind me asking. And this guy says, you'll be fine. There's just a lot of colorful characters in commodities. Yeah. Give it for free to some competing hedge funds, or at least threaten to do so. They might pay you if your strategy works, so that you keep quiet. I don't know. Like, I'm still stuck on the 3 years sort of a thing. I'm kind of sitting here like, maybe your work just wasn't actually that good. Yes. Common and practiced in a few funds, especially those that employ senior PMs to, quote, mentor and guide you. The only way you can get back at them is to run your strategy in another fund with a similar execution, and I'm guessing there is limited capacity for the strategy. You'll at least share some of the pot. Oh, gotcha. Because they were talking about execution, so he's saying, yeah, there must, if you already know like how much you can trade it, right, then you can come in and take 50% of it or something like that and compete for it. Cool. The only thing to do is to tell us what the strat was. Oh, geez. I think you should name and shame. Do you think going to Bloomberg or some other publication and doing bad press is the way to go? And this guy says, I don't think they'll bite. You'd only be able to have opinion pieces on them just as a caution to future applicants. Because they want to be friends with future sources for articles. Yeah. It's something that I wish was, if this is a common practice, then I would love to see stories about this on Bloomberg, but I don't know if they would actually bite. Yeah, a 4 sharp is really good. I would love to see it over 5 years, but 4 sharp over 3 years is really good. Nah, even if they're legally in the right. Here's somebody saying name and shame. He says they're legally in the right. They just found loopholes to exploit me. It's still what they did was wrong. Publish the strategy online. Good. But then you probably get sued for that. But I do kind of feel like this guy was being a little bit naive here, because if that was really the setup that you had with them, why did you not have a contract? And why was the contract not, consider like, what if you get fired, for instance? Okay, so this is interesting. Here's this guy says, is your strategy so simple that they can run it without you? I remember talking with a head quant once who mentioned that he had a couple of bad fake actors who did something similar to him. So the lesson is, A, never fully explain your strategy, and B, intentionally misleading. Yes, I would sue, but this is tricky. If you can prove that they stole your work. Hedge funds sue employees all the time when the reverse happens. It's going to be an expensive legal name battle. Name drop the company and give them a really bad name. Divulge the name of the firm. But employment is at will. But still, what they did was so wrong. Let me tell you something. I worked at a crypto hedge fund, and the tech lead, a fraud, didn't know coding or anything. He had a music degree. He would steal my code and the strategy from the quant and use that as the selling point to other crypto funds. Apply to competing companies in the same space and spread word about their unprofessionalism. It's a small industry, right? It lets you know that many of these hedge fund guys are pure frauds and not that smart to begin with. That kind of makes me think, because at some point, we start a fund, and I would love to hire people, love to hire some quants and like expand the strategies and so forth. And I think that if they were to work for me, man, I'm having a hard time with my voice today. I think part of the selling point would be, hey, this is a fund that everybody can invest in if they get the certification. So the last thing that I would want to do is try and screw some quant out of the strategy, right? So I would have to think about if I was going to hire somebody like that, to have a good contract that, you know, really has rights in for both of us, you know, so that something like this can't happen. You know, like I think that a good contract gives both sides peace of mind, you know? This is the first time I've ever heard of something like this, and I'm a little shocked to see people saying that this is so much of a thing. You must be very popular. I received so many friend requests from you. Well, it's not that I'm popular. We run the largest free futures trading Discord out there. We were on Discord when Discord was a brand new thing, and nobody had even thought about or considered having Discords, right? Like after 2020, like everybody had a trading Discord, right? But we made our Discord in 2016. Okay. So it's been around for a long time. And we are on the server discovery page. And so basically anybody that moderates a large public Discord that's on the server discovery page will get a ton of people trying to impersonate them. Now, I went and I wrote a robot and I set up my own server architecture and everything. I was having some problems because when I was using Debian, for some reason the network interface would die after 3 weeks, and it did that to me twice. So I switched to Arch Linux and I haven't had any problems. And I have a Kubernetes structure and everything like that. So I have this robot and it scans every person that joins and every time that somebody changes their name. And it uses fuzzy logic and all of these other sorts of things so that you can't just like change letters or kind of use special characters and things like that. So that anybody that tries to impersonate me immediately gets banned from the server. The problem is that doesn't stop them from, you know, I can't ban them from Discord. I can only ban them from my server. And so what they do is they still message you, even though they're not on the server, and there's nothing I can do about it. So if you come into these fake requests, and I bet you that you probably get like 4 to 6 of them, right? And it's really killing. I'm kind of thinking about just taking us off of the server discovery, frankly, because it's becoming so much of a problem. I should post about that on the Discord subreddit. But yeah, report them to Discord. Like when they send you messages, like they'll send you a friend request, and then they send you a message or whatever, and then report them as spam so that those accounts get banned. For you, it's no problem. Yeah, but it is a problem. Like over the last year, there has been a little bit less activity on Discord, and I strongly suspect that part of it is that people don't like the spam. Yeah. But it's not because there's anything so special about me, per se. And I tell you what, because like Anthony Crudelli, he has a server. It's just as bad, if not worse, over there. It's a problem across the board. And I feel like Discord has just kind of been putting their heads in the sand over it. 'Cause they did force people, they did change the name thing so that it's easier for you to detect when people are doing this, but it really doesn't solve the problem. I don't think that we actually get that many full, so let's look, because it shows you. see, I can see like all of the members, and it will even tell me why they joined. So, oh, those I'm looking for people with speculator Seth, but so these when it says hidden, that's basically because there's a join code there, right? So all of these people that have joined in the last day or two, almost all of them came from the link and not from server discovery. I don't know if taking me off of server discovery would necessarily cause the problem though, because Obsidian came from server discovery. That's interesting. He's been popping around. He's been pretty active here in chat too. Yeah, I don't know. It's a big problem. I've done everything that I can about it though. Because I'm sure when you come in, that's kind of what you were thinking was like, does he really know that there's this many people impersonating him? And like, there's maybe some things that he can do about it. But like, I've basically done everything that I think he can. I guess I should probably go and make a thing that like auto reports them too. But because frankly, when this happens, I think that I have enough justification to just auto ban people. Anyways, where was I? Happens to most popular groups, yeah. I tell you what, on YouTube, the number of spam requests that I get for people to join some of the Pokemon Grow groups that I administrate are just absolutely insane. Dude, this quant thread, like that was posted at night, so most of the people that are talking in here are from Europe. I wonder how that turns out, because that story is has me super triggered. New all-time high on NQ. Yeah, they did pop back up, didn't they? I was kind of curious, like the treasuries ultimately decided that like, okay, we get nothing out of non-farms, but the S&P 500 was happy to just continue rallying. And it's getting crazy over there. Okay, well, I was still looking for if what Reddit thinks about Reddit's new pro subscription or whatever. What was it called? It was like Reddit Pro or something. Okay, well, not there. Maybe I just search Reddit. Reddit Bro. Past 24 hours. Maybe if I just search for Pro in the past 24 hours. Nothing about it yet that I can find on search, so maybe we just have to wait longer. I'm concerned that Reddit will be very unhappy about this and that will hurt their IPO price. Well, not hurt their IPO price, but could hurt their long-term success, let's say, and would make me not want to participate in the IPO. I'm still kind of just scrolling down here to see. This is a little bit of a rise. This is like the higher end of the range here, I guess you could say, between the buy and the sell average positions. Now I'm thinking back about this Biden. Yeah, media falls in love with feisty, fiery Biden all over again. That's funny. Want to hear more about what he was promoting in his speech, because it sounds like a little ridiculous. Some big liquidity spots right here a little bit in the E-mini, but it looks like they are just trending up really, really strongly. Yeah, so conservative media are acting like that Biden's speech was particularly crazy or something, but you can't short this. Oh yeah, for sure. I saw this post the other day that somebody said that they had like $50,000 that was like an inheritance or something, and they blew it all. First of all, I can't believe that people would bet those sorts of things. Like, to me, you get an inheritance, you can save that away. Like, pay off any of your debt, save the rest of it as much as you can into tax-advantaged accounts and things like that. Because that's basically like And especially some of the amounts that people are getting, that's like setting you up for like your retirement is set now. Like you're set for life. Not set for life, but like you don't have to take big risks with that money. Basically, you can put that money away and then use your own money essentially to take risks. And you don't have to like blow, 40,000 or whatever the deal is, but you can just take smaller risks. And I don't know. The whole thing is just crazy to me. I saw a guy, he said that he had lost like $50,000, that he had just happened to decide to start shorting crypto at this spot. And I'm like, what the F is wrong with you? Like, wow. The things that people do. Like, look, I'll make bad trades and everything, but I don't think I've ever made a trade that bad. You know? Like, you want to short crypto? Go buy MSTR puts. But don't put $40,000 on you put that much money into it. Let's see here. Ted Cruz says, I think tonight was astonishing. I've never seen anything like it. It was a campaign speech, but it was an exceptionally bad campaign speech. Joe Biden was angry. He was bitter. He was screaming, as you noted. The entire night, he was radical and extreme, and he was completely out of touch with the American people. That it sure sounds like he was out of touch, because the proposals that I'm hearing coming out of this just sound absolutely insane to me. Buy NVIDIA call options, for sure. Well, I saw this person, they had an interesting way of approaching the investing, but I'm not necessarily the way that I would recommend somebody invest, but I did think that it was interesting. And they were saying that, NVIDIA is going up because their earnings are going up, and the stock price has not gone up as much as the earnings are. So from their perspective, NVIDIA was probably still undervalued relative to its earnings, even after all of this rise. So I was kind of like, that's not exactly the way that it works, but okay. That was interesting. What's remarkable, Sean, is Joe Biden and the White House, they apparently made the decision that they want no Republican votes because he basically told every Republican to go jump in a lake. We don't care about anything you believe in. They also decided, amazingly, they want no independent votes. They decided their strategy for November is to go hard left and turn out the radical left. Yeah, that is what it sounds like. And it was, in State of Unions, typically, whether you have a Democrat or a Republican president who's giving the speech, there are a number of lines there that are designed to reach out to the other party and to get everyone standing. I gotta say, this was the State of the Union. In many ways, half the Republicans almost fell asleep, because after welcoming the president, where we stand and show respect for the office, we basically sat there for over an hour as he told lie after lie after lie. And he just went hard left. I've never seen anything like this. It's definitely like the amount that he's going left is definitely shocking to me. Now, I can only remember George Bush and Barack Obama and Donald Trump Statement of the Union speeches, but I would say that his assessment there is pretty accurate, that like there are things that everybody should be, happy and vote, clap about, and that, I've never seen such a hard left sort of a take on it. That's a little wild. I dare say that Joe Biden is further far left than Donald Trump is far right. And this seems to be like, I've kind of been feeling this way for a while, but the combination of a couple of things going on here, it's really, really starting to cement in my mind that Joe Biden's election chances are just plummeting because he's going so far left, and so many people are starting to say, this guy is not on my side. I don't like Donald Trump, but this other guy is crazy and not on my side. Like, Donald Trump is maybe crazy, but I think that at least he has my best interests in mind. You know? That's what I think is happening. And so the chances of a Biden re-election are becoming slimmer. And that's relevant for the market. It's kind of funny because some people think that the market is rallying because they're pumping the market to try and get Joe Biden elected. There are other people that think that the market is rallying as Donald Trump's chances for winning go up, which there is a correlation. So it'll be interesting to see how it actually turns out. Treasuries did kind of come back down there again. And so far, isn't it funny? Because I said this like almost an hour ago, wasn't it? Was it an hour ago? 45 minutes ago. 45 minutes ago, I said, well, the thing that I would be most certain about is that it will rotate around the open, probably. And guess what? That's exactly what it's done. There was a little bit of a rise, and it's come right back to the open. I like this song. It's got the 808s. Them nasty 808s. Okay, apparently Joe Biden talked about how Republicans want to cut Social Security and Medicare again. He did that last Statement of the Union. Called the state border security package conservative because it provided more funds for judges and agents, all of which would have helped ferry people in instead of keeping people out and deporting them, which needs to happen. It also contained a pathway to citizenship for unvetted Afghan refugees and provided legal status to children on H-1B visas who lose their deportation protections around age 21. Was that the end of the... Oh, no, here's just a little break. And those guys saying, will this dress have legs? Probably not. You're right. Probably everybody's already forgotten about it because I'm not actually seeing that much like media, even on the political websites, as I thought that I would see about the State of the Union. wonder if r/politics has anything about. Well, here's the Statement of the Union address, but. Oh, that's interesting. It seems to me like the Democrats are most interested in saying that Joe Biden had energy. Because that's like one of his biggest vulnerabilities. Yeah, okay. Truth Social crashes during Statement of the Union address. Oh, that's interesting. Let's go take a look at the chart. News scale pushing new highs again today. I've been watching this one, and I've been watching this little rise here because apparently more money is going into nuclear, and they're kind of breaking up here. I'm a little bit unsure because news scale, like their main thing, kind of died. So I don't know if this is actually a company you want to go into, but it's been doing well. Anyways, the WAC, right? Digital World Acquisition Corporation. I'm not seeing it crash during the Statement of the Union address, so I think that is a fake story from the Daily Beast. Oh, but the Truth Social itself was down. Gotcha. Okay. I want to see if there's something that's specifically about the $500. Nope. r/politics is more interested in Donald Trump having to pay legal fees. Seems no. I mean, if nobody sees that campaign promise and it does, and you know, everybody forgets about it, then maybe it doesn't matter. But if it becomes an issue, that could absolutely kill Biden's chances here. Let's see. So I should recenter the treasuries here. I don't know, you might see a price action set up here. Not that I believe in these, but like, you know, head and shoulders probably. Probably what they're looking at. I think that what you'll see happen though is maybe they'll actually beat out this. Like they'll beat out this and then they'll come right back to here. That's probably what happens. Funny, and the r/politics, when you sort his statement of the union thread by controversial, like the comments that are the most controversial, I have to do with Israel, rather than criticizing what he actually said in the speech. It kind of shows you how polarized the politics have become, that the Republicans just don't even bother trying to post in the r/politics subreddit anymore. There's another 2 ticks down. I need to watch. What did he actually specifically say? That is what he said. Positive delta on MES all day. Yeah. I mean, there was a pullback there going into the open, but since the open, it's just been all up, right? Now, the treasuries have been a lot more mixed and confusing. But, so when we were talking about it before, and I was like saying, I was trying to explain to people, like I came in and I was like, well, here's why I'm not taking a trade. But then when I explained it to it, I was like, well, but the 10-year is kind of down. So like, how do I tell them that, this doesn't meet the qualifications? I kind of had a hard time explaining it, but now you can see it much more clearly, right? Like here in the 10-year, it's just like sideways cumulative delta. The delta in the 30-year is just all down because of the way that the spread is going. But then here, even here in the 5-year, you're seeing there's like some down. So like the treasury's basically decided, okay, you guys all had your knee-jerk reactions, and then the longer-term players came in and said, no, this means nothing, and brought it back to unchanged. And then since that point, right, since unchanged, it's just noise. I think that the large meta orders left the market. Another downtick. Well, let's see here. 23 was the last swing low. There's still a ways that they can go. I don't know. I'm kind of like looking through here today, and I'm like, I'm expecting to see like certain reactions from social media. And maybe it's just because people haven't woken up yet, but I'm kind of like not seeing it. And I'm wondering, like, does this like slowly set in over the weekend, or is just nobody paying attention anymore? And you know what? I don't blame anybody if they don't pay attention anymore. I myself am definitely like way less engaged than I used to be. That's primarily because I'm more concerned about preventing my toddlers from killing each other. But oh, look, there goes Bitcoin. Oh, I thought, man, I thought that they were going to wait until the weekend to do that, but they couldn't wait. But sure enough, there it is. All of the stops triggering. Bitcoin just taking off there. Oh, hey, I noticed before the news squawk said something. I'd said, now the news squawk is saying something. Are you watching my stream, Financial Juice? Is that what's going on here? You know what? I tell you what. I try my best to try and help you guys be like informed on what's going on in the markets. But when it comes to like breaking market news, I'm just not going to get it to you quickly enough. And I find that Financial Juice gets the job done really, really well. It's a really good price for retail traders. It's about $100 a month. And they have an option to pay for basically a lifetime, and which is like just absolutely a steal. And if, you know, I think most of you guys here are like in it for the long haul. Like, you know, it's really hard. I'm maybe not making money with it right now. I don't have to trade it live. I can trade it sim until I feel like I have something going, and this is just what I love, and I want to put a good portion of my life into it, right? You're planning on doing it for years and years and years, then it's just a no-brainer decision to get the news squawk. And I'm not just saying that because I have an affiliate link in the video description. It truly is like the most useful thing to my trading. Like, there was a big positive change in my trading when I started using the news squawk. But at that moment, I beat them and noticed Bitcoin taking off before they did. Whoa, wait, what the F? Okay, that's hilarious because as soon as I say all of that, they come and just completely crash and lose all of those gains almost instantly. That's, man. Holy crap. Okay, listen. If you've been watching this stream and you're like thinking, oh, maybe I should trade Bitcoin, but then, you know, you hear me and I'm like, you know, I wouldn't recommend day trading Bitcoin. And you're probably sitting there like, why does Seth hate Bitcoin? I think that maybe I could have some success at trading Bitcoin. I just don't understand why he's so against it. This is why. This is why. That is a crazy, crazy move, dude. If you were in that, you lost money. If you had any kind of leverage, that's the $10,000. Well, actually, how much is it? That's a $3,000 move. Just in notional terms. And you might actually be like in on leverage too. So yeah, This is why I would not recommend trading Bitcoin. There was some volume on the dump too. Yeah, you know what? I should put like volume on this chart. Like I don't use the cumulative delta on this one, but I think vol might be interesting to have on there. Oh yeah, you're right. There is some real volume on that. I would say it's about as much volume as some of these other like really big moves, but whew. If you insist on day trading Bitcoin, be careful. It sure seems to me like that there is a really large player that whenever they get up to 70,000, they sell though. That's like the third or fourth time that that's happened now. But over the weekend, I bet you that Bitcoin continues to try and push. I don't know. I guess you could see it the other way. I have seen some situations where Bitcoin sold over the weekend and it was really, really ugly, right? Here's an interesting... See, this is what I actually go to Reddit for. Why Facebook doesn't use Git. Wow, this guy bought NVIDIA at $775. Good for you. Bravo, sir. Bravo. Wow. And he bought it... Wait. He bought it $1,000. No. That's how much he's up today. He's basically made $25,000 on that one trade. Or one investment. That's amazing. TikTok crackdown bill unanimously approved by U.S. House panel. While I was hearing stuff about it, I didn't realize that it was that. That sounds like something that may likely actually come through this time. Here's an Ask Reddit thread about the Statement of the Union address. Majoring Taylor Greene did interrupt the thing. Man, even after Johnson said not to, good grief. So wondering if Bitcoin was gonna like retrace that selling as well, but it doesn't look like it is. It looks like they're just the large meta order came through. Now they're mean reverting, and it's probably gonna chill there for the rest of the day. That was pretty wild, man. That whole sequence of events was pretty funny. But there was like, yeah, look, I noticed it before other people did. That's kind of cool. No, not that I'm sure that if you had some sort of an alert on there, of course you'd definitely notice it. But then like almost as soon as I got done talking about it, it crashed. It just crashed hardcore. You know what? There was this story earlier in the week that was suggesting that Joe Biden might make some proposals about immigration or something like that. But doesn't seem like that actually happened, did it? Because I haven't heard anything about that. Of course, I will watch the speech later today if I get the chance. I've been working really hard. We spent yesterday we had we investigated a production issue and then programmed, and I was programming deep. But you know what? I've been spending a lot of time with Helix Editor, and I really love doing that. I really love like learning to use a new program when it's like all typing, like just going 100 miles an hour typing, is I love that feeling. I love it. I love it. Have you noticed when you have a huge delta in one bad, it is followed by another huge delta in the other direction? I don't know about that. I mean, the kinds of days that I'm most interested in are the ones where delta just continues to go up this, one way all day long. And overall, the evidence is that there's a pretty strong autocorrelation in the order flow signs. So most of the time you should see a fairly steady trend one direction or the other in cumulative delta. So I don't know, if we could go and we could try and do a study and say, when there's a change of cumulative delta that is we could do it by sigma, right? Let's say here's what the average change in cumulative delta is. We would just say the absolute value of cumulative delta, right? Here's the average. And then we say when the change is an X sigma amount, are you likely to see another bar within that 30 minutes that is really big as a cell as well? And then that would be a way to directly test that. I think that the implication is that when you see a huge delta move like that in one direction, that you would go short. I can almost guarantee you that if you did that, it probably wouldn't turn out very well. Because if anything, the fat-tailed nature of that kind of a trade would really come back and bite you. Well, let's see, we got about 5 minutes left. It's curious to me that we're going to end my trading session below the open. Price in the treasuries sure have died down though, right? It's really flatlining now. So I really think on a Friday, something that you really got to be careful about is that, the big guys, they come in and they make their money off of the NARM farms and the S&P 500 open, and then they've made their money and they go home for the weekend early. So you got to be careful. The longer that things go on a Friday, the more likely you are to lose money, right? And the less overall movement that you see, and that's definitely what's happening. Is it's just turning into a complete flatline. You know what? I used to put a lot of work into regularly posting something on Facebook every day that would be entertaining and so forth. And so Facebook will show them to me later. And it's good stuff. Look at this. Strong people don't put others down. They lift them up. And then it's got a picture of Darth Vader holding somebody up and choking them. Love it. Love it. Mm. You know, even though the dollar retraced a lot of that movement, they're still down on the day pretty significantly. Well, wish there was more to say, but social media is being a little bit weird today. And this has been, you know what? This has been the most uneventful non-farms payroll in a long time, which is kind of funny because I find the data in it very interesting and it could be really significant in the long run. We are getting some kind of interesting stuff going on, and this may end up being a non-farms that, matters a lot to the future trajectory of things. But the reason that is because it's like, this means nothing. It's kind of funny. So, yeah, the most uneventful non-farms we've had in a long time. But I guess that's a good change because the last few non-farms have been just way too crazy. So next week, we should still have some good trade. We'll have CPIs and so forth. So I will see you guys then. And in the meantime, stay excellent, team.